Good morning, Steve Free in Chicago with the morning grain comments. Grains are a little bit lower. We've got stocks higher, dollar lower, and crude lower, and most of the metals and softs are also lower. We finally got the commitments to traders report, and it showed that last week funds added 29,000 contracts to beans, 9 to meal, 10 to oil, reduced their long in corn by 27,000 contract, and increased their short in wheat by 7,000 contracts. Right now, after yesterday's trade, we feel that funds are still long about 100 beans, maybe 85 meal, 96 oil, 220 corn, and short 43 wheat. And I think for the markets to move out on the upside of the recent trading range, we're going to have poor South American weather. Right now, Argentina received some needed rains. More rain is needed. I think that weighed on soybean futures yesterday. I also think that Brazil, South Brazil needs a rain. Rio Grande do Sul. The rest of Brazil, I think, is okay. As far as bean exports, we're running 11% behind last year. Last week, China bought 40 cargoes of beans, mostly from South America. And from Jan forward, Brazil soybean prices are cheaper than U.S. The soybean complex has been supported by talk of increased soybean oil demand on biofuel. It's interesting that if you take South American soybean oil, add some freight, it does work bringing soybean oil from South America into the United States. We are noting that Matif rapeseed hit a 4-week low. Again, I think that's more concerned about Asian demand. It's interesting that sometime today, a baby is going to be born in this world and will be number 8 billion. The corn market, we're near and actually traded below the lower end of the 3-month trading range. Most people think that Russia will extend the Ukraine export corridor. Brazil, corn prices are still cheaper than U.S. And Ukraine right now is quoted somewhere in the 250 area. U.S. corn is at 340. Corn exports running 30% behind last year, and the total commitment is 54% behind last year. We got to wait till January to find out what the stocks are as far as SEPNOV demand. But again, we would expect that demand should show fairly good demand domestically, but that export number is going to bring stocks up higher. Matif corn down for the 9th straight day at 10-week low. Still concerned about bird flu spreading in parts of Europe and Asia. The Iraq yesterday surprisingly bought U.S. hard red spring off the PNW. We still see the Kansas City March almost $1.20 above Chicago March. U.S. wheat exports are down 4% from last year. The good to excellent was raised 2 percentage points to 32 for the winter wheat, but 64 was the rating last year at this time. Matif lower at 10-week lows, and again, trading the chance that the corridor might remain open. So I think the market path of least resistance is lower as long as South American weather is okay.